Thanks for joining me in my market report. My name is Mike, and this market report is on mortgage rates. We kind of like to go into what's impacting them on a daily basis. We come out with these reports Monday through Friday when the reports are open, when the markets are open, of course, with exceptions to holidays. Uh, we don't get into price quotes, primarily because there's so many variables that go into it and loan programs that we have different rates out there. So without further ado, a little bit about myself is I am a loan officer. I do work with a national lender. So if you do want that rate quote, I can give that to you personally. We just need to go get some information from you so we can give you a little bit more, a better estimate what your rate quote would be. If you got questions about whether it's the trend of the rates or if you got questions about mortgage programs out there or real estate related, please feel free to reach out as well. If you need assistance, want us to look at some numbers for refinance or purchase, we can get you that pre-approval so you can buy that next property as well as run some numbers and see if a refinance might make sense for you. So without further ado, we'll jump into the economic report today to give you in the reports. We do got two important data today. We got the inflation data from the CPI as well as the initial jobless claims that we get every week. So we'll start off with the CPI, which is really the big catalyst for the week that we've been waiting for. We'll start off with the month over month here. So that one is they're not kind of really in good order here. So my apologies. So this is the month over month. The previous month rose 0.8%. That's when we had that really big spike and the markets just tanked. Both stock and bonds tanked. 0.8%. Forecast called for 0.4% and exceeded that at 0.6% for the month of May. Now it's year over year went from 4.2% with forecast of 4.7, exceeding that to 5%. So obviously a very high number there. Now, if you take out the food and energy, which are variables that we cannot control, we get what they call the core CPI, and that's kind of more what the Fed and investors will look at. So the month over month on that rose back in April at 0.9%. Forecast called for 0.4% and rose higher than that, 0.7%. Now, its year over year went from 3% with forecast at 3.4% to 3.8% in May. So that's a pretty big spike in, obviously, a big spike in inflation data there. And again, the Fed do feel this is going to be transitory. Other people, investors, are getting kind of more on board with it. They may not be fully invested with it, but they're, due to the market's sake, they are kind of going along with it for the most part. We'll touch on that again in a little bit as we'll talk. Well, we'll touch about it right now. I'm reading a lot of investors are kind of feeling that the idea is that maybe definition of transitory. They do feel that we're kind of reaching the peak of where we'll be at inflation data. However, the Fed probably feels that we are probably gonna it's gonna drop more rapidly than what most investors are figuring. Most investors think they'll probably be there for the next 1 to 2, at least maybe next 2 years at a higher level than the 2.5% that we want to be. And to them, transitory, that length of period, uh, that pace will be not really considered transitory for them. So they feel that could be maybe a different. The language may not be uh, as cohesive together what they believe in. So let's kind of go in here. Jobless claims or initial jobless claims. We had 385,000 people the last week's report. However, that did get revised higher up to I think it was 405,000. So this was the first time we had seen under 400,000, and it did get revised a little bit higher. However, this week forecast come for 370,000, and we came in at 376. So again, we did come in under 400,000, even though the other one was revised higher. But it's getting a little bit better, which is obviously good news here. And if you look at continued claims, we had a pretty big drop right there. We went from 3.771 million to drop down to 3.499 million in continued claims. So that's obviously a very good sign that things are improving. That's about 200,000 people now jumping into the markets, are getting out the unemployment here. Let's take a look at the headline news. Stocks are up so far this morning. It helped with the ECB comments. They had their meeting, and Christine Lagarde gave basically kind of reiterated kind of what the Fed is saying. What the Fed is saying, they do believe it's transitory. They're going to keep it. They're going to increase the pace of their PEPP program, which is the same as basically our bond buying program here. But they may increase their pace of that of those purchases. So that was kind of good news from what they were hearing. But basically, what she was saying was kind of in line with what our Fed was saying in terms of inflation and jobs data, the economy overall on there. There's a little comment that was a little report out there that the SEP is kind of getting into some of these meme stocks that they're looking at GameStop because of the big spikes. Um, and then they're not the only ones that are being looked at, so they're probing a few other companies as well. But in any case, you know, government interference, I guess, if you want to say. I guess they have the right to look into it, but however, I don't know how you go into it. But besides the fact, let's jump ahead, look into mortgage-backed securities. Um, After the report came out, we were way down here. We tested this 25-day moving average. We were way down here. Pricing levels were basically came in with our pricing down here. So initially, rates did worsen a bit after that inflation data. However, it has subsided a bit. It has risen now. Came back to not only the levels we're at, but back to 0.2% or up 2 basis points for the day, and just testing this 100-day moving average. Now, what does that mean? We were down. Our pricing was a little bit worse than yesterday's close. However, now we're close. Now lenders have been coming back and repricing, and we're about the same as where we left off yesterday. So, for the most part, about at this point, later in the day here, we're at unchanged levels from where we were at yesterday's close. Yields kind of the same thing. Yields actually getting better here. As you see, it worsened, went way up to about 1.55 level. However, it came back and now is testing this technical floor here, and we're at about the 1.47 range, lower than where we were yesterday. So yields have come down a little bit as well, which is adding a little less pressure on mortgage-backed securities and helping them out with our better rates here overall. All right, folks. Again, if you guys like the video, please smash that like button. It certainly helps us out. We thank you very much for your for watching the video. And if you guys got questions or we can help you out in any way, please feel free to reach out. Until then, we'll see you in tomorrow's video. Take care. Bye bye.